Thank you for that very kind invitation. Sometimes you don't recognize the person that is being described as you. And to be perfectly honest, I ask you to excuse me because even as all of that description was coming out, I was actually just bothered about one other thing. And that is, in spite of all the descriptors that you can make of me, there's one descriptor that you can't add. And that has got to do with the ESS Youth Wing. Because you have to be under 35 to join in. And so when you talked about that, Houston, I was very starkly reminded of the scarcity of youth in our lives. And you know, these things, you reach a certain point, they bother you. Well, Professor Houston Kwa, President of the Economic Society of Singapore, my many teachers of economics, Professor Basan Kapoor, Professor Lim Chong Ya, and I'm sure there are others I might not have been able to see you, colleagues and friends. Good evening and thank you for inviting me. Time is somewhat limited, so I hope you don't mind that we go straight to the point. Now, in the days leading up to this dinner, there were two major sets of announcements that would be of interest to you. Our short-term economic outlook, our medium and longer-term plans for older workers. Let me start with our economic outlook. Last week, MTI adjusted our GDP growth forecast for 2019 from 1.5 to 2.5% previously. It is now 0 to 1%. So on both ends, both bounds, both ends of the bounds, 1.5% slashed. The revised forecast takes into account Singapore's economic performance for the first half of the year and the increasingly uncertain external environment. At Sunday's National Day rally, Prime Minister gave the government's assessment of our economic situation. I shall not repeat everything he said, but will instead highlight a few points wearing my manpower hat. Firstly, so far, retrenchments have remained at low level. Unemployment has inched upwards, but also remained low. For now, it appears that businesses are not trimming headcounts across the board, but they are certainly more cautious with hiring. This assessment is also consonant with what some of you have told me. Song Seng-Woon, for example, I don't know whether he's here this evening. He has seen a lot over the years. There he is. He has seen a lot over the years, and he thinks this round is quite interesting how some sectors seem to be going really well, even if a few are underwater. So it's quite clearly not a general downturn. Indeed, while the uncertainties and risks have grown, there are some reasons for cheer. The long-term fundamentals of our economy, such as a pro-business environment and strong connectivity with the rest of the world, remain sound. We continue to attract a pipeline of good investments into Singapore. The bright spots include Infocom technology, finance and insurance sectors, which are projected to remain healthy. According to a recent survey by the Singapore FinTech Association and PwC Singapore, about 94% of fintech firms in Singapore intend to expand their current workforce within the next 12 months. Therefore, there is no stimulus package as yet, but we will be monitoring these developments very closely. as Barnabas Gan. Is he here this evening? He's also there. Barnabas Gan reminded me that there can be unknown unknowns. You don't know that this is a risk factor. And so surprises that we may not have anticipated. So some humility is helpful here. In the medium to longer term, there is no question that structural change is needed. Irvin Seah, I'm guessing he's there too, therefore believes that government's interventions should not respond purely or even primarily to cyclical weaknesses. So you have to respond, but not purely and not primarily to cyclical weaknesses. And I agree. In particular, we should be mindful of the pressures faced by SMEs and continue to offer practical help. Where we have to make policy adjustments for our medium and longer term interests, we should phase in the changes and take them in small steps. Support schemes should also be readily available to the businesses that are making the effort to restructure, to build new capabilities, and to reskill our people. One group, I believe, deserves closer attention. They are our older workers. In preparing for tonight's event, I did some research and found that for the Economic Society's annual dinner in 2016, then Deputy Prime Minister DPM Tharman had also focused on our seniors and our system of social security, how our approach in Singapore is similar to other countries and yet also unique. Two important pillars of our system of social security are the CPF, Central Provident Fund, and workfare. Both help workers save for housing, healthcare, and retirement. But the workers don't do it alone. Employers contribute, and so does the government. Our workers are, however, aging. In the next decade, Singapore will experience its most significant demographic shift in our generation. Around 500,000 citizens will turn 65 over the next 10 years. That's around 50,000 every year. By 2030, we expect the citizen population aged 65 and above to nearly double to 900,000. Many of these citizens, even if not all, want the option to continue working. It helps them stay meaningfully engaged and to build up more savings to be financially independent when they eventually do retire. This is the reason why, around May last year, I set up a tripartite work group to strengthen support for older workers. Specifically, I asked the work group, which my PUMSEC chaired, to review the longer-term relevance and consider the next moves for the retirement age and re-employment age. To also examine the CPF contribution rates for older workers and their impact on retirement adequacy. And, importantly, promote an inclusive workforce and progressive workplaces that value older workers. So those were the terms of reference for the tripartite work group. After a year of work, the tripartite work group came to a consensus and put forward 22 recommendations which the government has accepted in full. What were the key issues debated? Do the recommendations go far enough, or have they gone too far? Before I go into the nuts and bolts, let me extract from the vision articulated by the work group when presenting their recommendations, and I quote, this is from the work group. Our vision is to achieve productive longevity in Singapore. Our seniors can fulfill their aspirations to work for as long as they wish while contributing meaningfully to a vibrant economy. Our collective efforts will turn our aging population into inclusive and dynamic workforce, transform our businesses into progressive and productive enterprises, and build a Singapore where older workers can thrive in the future economy. Close quote. Now, this is an interesting vision, and it got me thinking. Is the idea of productive longevity an economic vision? Because it also sounds like a social vision. Or perhaps it is a political vision. I have some thoughts about it, but I shall leave them to the end. Now, I want to firstly deal with two common misunderstandings about our statutory retirement age. Some people believe that if there is no law specifying a retirement age, everyone can work for as long as they wish. But I'm afraid that is plain wishful thinking. Before 1993, there was in fact no legislated retirement age in Singapore. This meant that an employer could retire any worker at any age. At that time, companies typically retired their workers at age 55. In 1988, the government encouraged employers and unions to voluntarily raise their company-specific retirement ages from the norm of 55 to 60. However, only about 10% of the companies did. The Retirement Age Act was therefore introduced in 1993 to legislate a retirement age of 60. The legal effect of stipulating a retirement age in law is that an employer cannot retire or dismiss a worker simply because the worker has reached a certain age, if the worker is below the retirement age. In 1999, the statutory retirement age was raised to 62. Essentially, the Retirement Age Act prevents employers from prematurely dismissing an older worker because of age. It provides legal protection for our older workers. But it does not take away an older worker's freedom to stop working anytime he or she wishes. The abolitionists, there is a group of people who want to abolish the retirement age, I call them the abolitionists. They may not have realized that when the statutory retirement age is removed, so too the employer's legal obligation. We will then regress back to the days before 1993, which means employer can ask you to go at any age. Today, even though we see employers being more receptive to hiring and keeping older workers, ageism has not completely disappeared. This is why union representatives have always called for the statutory retirement age to be raised, not removed. But for the Ministry of Manpower, and actually the whole of government, besides looking out for workers, we must also balance it against employers' needs. In 2005, the tripartite partners in Singapore explored how to help people work beyond 62, if that was what they wished. A simple way would be to raise the retirement age further. However, given that the seniority-based wage system was still very much in practice then, doing so would impact business costs and productivity. The effect might then have been the opposite, and that is to deter employers from hiring older workers. The concept of re-employment was then considered. This model was pioneered in Japan. It obliges employers to offer re-employment contracts to eligible older workers who have reached the retirement age. At the same time, it gives employers flexibility to make reasonable adjustments to the job scope, wages, and other employment terms. In other words, after reaching the retirement age, the worker would be offered a job, but not necessarily the same job or necessarily the same pay. Announced in 2007, re-employment was subsequently legislated in 2012. Employers then were required to offer annual re-employment to eligible employees from the age of 62 up to the re-employment age of 65. In 2017, the re-employment age was raised to 67. So today, retirement age, statutory retirement age 62, re-employment age 67. Now, what is the effect of re-employment on employers? Well, it allays concerns over labor market rigidity and being bound to overly high manpower costs. Extending the employment of older workers beyond the retirement age therefore became more sustainable. So the combination of having a retirement age, a statutory retirement age, and a re-employment age has worked reasonably well for us. Well over 90% of workers who are eligible for re-employment and who wish to continue working are offered re-employment upon reaching the current retirement age of 62. And from 2008 to 2018, a decade's worth, employment rates increased by about 10 percentage points for both residents in the 55 to 64 age group and the older age groups. So for both of those age groups, if you look at the employment rates a decade ago and at the end of 2018, it's gone up 10 percentage points. This is why the tripartite work group recommended keeping both the retirement age and re-employment age. It also recommended raising both by 3 years to maintain the balance between assurance for workers and flexibility for employers. Now you may ask, why 3 years? Not more, not less. Well, in the years since 1999, when the retirement age was last raised to 62, the healthy life expectancy has also gone up by just over 3 years. Therefore, in July 2022, the retirement age will go up from 62 to 63, while the re-employment age will go up from 67 to 68, and eventually, by 2030, the retirement age will go up to 65, while the re-employment age will go up to 70. And 70 is far beyond what Japan has set as its re-employment age, and probably one of the highest ages in the world, I think even in 2030, where there is assurance of work. Now this brings me to the second common misunderstanding. Some people think they must work till they reach the retirement or re-employment age. As a result, when these are raised, they think they are being forced to work longer. But in fact, they are mistaken. In some countries, the retirement age is also the age for pension withdrawal. Naturally, in these countries, people expect to work up to the retirement age because the pensions don't start till then. In Singapore, our CPF withdrawal age is not tied to the retirement age nor the re-employment age. At age 55, CPF members get to withdraw part of their savings. at age 65, members can start to receive their remaining savings in monthly payouts. People can and do choose to stop working before they reach their retirement or re-employment age. Let me turn now to the question of the CPF contribution rates. Specifically, is it still necessary to taper down the CPF contribution rates beyond a certain age? Why not let everyone enjoy the same contribution rates regardless of age? The Institute of Policy Studies made such a call recently for full equalization of all older workers' CPF contribution rates with that of younger workers. Now, their reason is a valid one. It would boost retirement savings more. Again, some history is instructive. In 1955, when CPF was started, not so many people realized this, CPF was started during colonial times, even before we achieved self-government, which came in 59, and well before, a decade before, we became independent in 65. So when CPF was started in 1955, contribution rates did not, in fact, depend on the member's age. It was only in 1988, more than 3 decades after inception, that CPF contribution rates for older workers were lowered and began to be tiered. At the time, it was commonplace for wages to be based on the length of service with an employer. Older workers who had served the company for many years tended to be paid higher salaries than their younger peers, and not necessarily because they had bigger jobs or better performance. Salary was mostly a matter of seniority. The reduction in CPF contribution rates back then helped the employers to manage the costs of retaining their older workers. In other words, the lower CPF contribution rates were to offset the higher wage costs of older workers. It was a measure to safeguard their employability. Over the years, as we shifted away from seniority-based wages towards performance-based wages, and as the employability of older workers improved, contribution rates for older workers have been adjusted upwards. They now taper down from age 55 instead of 50 previously. Employability has, however, been kept up. The work group, therefore, recommended that rates can be gradually raised so that in future they start to taper only from age 60 instead of from 55 currently. So the first increase in CPF contribution rates for those aged 55 and above is modest, 0.5 percentage points to 1 percentage point each for employers or employees. And this first move will start 1st January 2021. But full equalization of CPF contribution rates beyond age 60 will carry considerable risks. Let me try and explain this. Today, a 70-year-old worker contributes 12.5 percentage points. 12.5 percentage points. Fully equalizing his contribution rate to that of a younger worker would require a substantial increase of 24.5 percentage points to 37%. So from 12.5 to go to 37 percentage points, the delta, 24.5 percentage points. That's a lot. Where will this 24.5 percentage points come from? It will have to be 15 percentage points from the worker and 9.5 percentage points from the employer. Now this means for the worker, 15% less in take-home pay. And for the employer, 9.5 percentage more in wage costs. Of course, we can make the argument that the increase can also be made gradual, phase it out. In fact, the work group recommends that each move for CPF rate adjustments should not require employers or employees to contribute more than 1 percentage point extra, each move. Successive moves should also be spread out over 10 years at least, stretching beyond 2030 if necessary. But even if we assume a smooth and gradual transition, it is hard to imagine that an employer sees no difference in the work capacity of an employee aged 60 and 70. Realistically, when we stretch out working lives, the work capacities at the upper end of the age spectrum is bound to disperse and become more varied. When they are of closer age group, well, work capacity, of course it depends on the individual, but when you stretch out working lives at the upper end of the age spectrum, I think you're going to find more variety, more dispersion. The employer would account for these differences by adjusting their total wages, which comprises salary and CPF contributions. If the CPF contribution rate is not lower for the older worker, that is, it is fully equalized, like before 1993, then the employer's calculation is that he would make the adjustment through the salary of the worker. Since the CPF contribution rates are the same, so he has no choice. He can only adjust the salary. Or he will find creative ways to let the worker go earlier. So a tapering down of CPF contribution rates after age 60 is a practical way of helping both the employer and the worker. At least maintain their employability. It may not accumulate a lot more in retirement savings, but he at least has his salary, and a job is better than no job. A salary is better than no salary. Given the concerns over the economy, let me also say something about the pace of change. And the question really is the pace too aggressive? Well, in fact, only the first two moves have been pinned down by the work group. On 1st January 2021 for the CPF rate hike, and on 1st July 2022 for the retirement and re-employment age increase. The remaining moves will be a matter for tripartite consultation, which can take into account the evolving economic landscape and still provide ample notice to the employers as well as to the workers. So this is what the work group has proposed. I think it is a measured pace, and only the first moves have been pinned down. On the flip side of those who think that this is a bit too glacial, there are also those who take the view that the work group could have introduced quicker and bolder moves. For example, IPS, Institute of Policy Studies, had proposed that we index the retirement and re-employment ages to health-adjusted life expectancy instead. Health-adjusted life expectancy, HALE, HALE. So peg your retirement age, peg your re-employment age to HALE. And then when new HALE numbers are published, then given a certain time frame, your retirement age and your re-employment age also automatically adjust. Now, based on their suggested model, the re-employment age in 2029 would be indexed to the HALE of Singaporeans today, which is about 74 years old. And this, if we go with the IPS suggestion, this would be 4 years above our target re-employment age of 70 in 2030, meaning that in 2030 you should be able to get re-employment up to 74. Now, HALE is undoubtedly a useful reference point, but for the proposed shifts to be workable, there's equally a need to account for other factors such as economic and labor market conditions. Denmark and Netherlands have linked their retirement age to improvements in life expectancy via a formula. So it's a formula-driven kind of policy. But interestingly, from their experience, it has led to pushback due to worries about the overly fast pace of increase in the retirement age and whether it was applicable to all categories of workers, because workers are not all of the same capacities. And so learning from this, we thought it would be better for Singapore to continue to rely on tripartite discussions and consultations across society, at least for now. I've spent some time unpacking the thinking behind the key recommendations of the tripartite work group on older workers. I hope they are useful to you and also provide a better understanding of Singapore's approach to senior employment, the unique retirement and re-employment framework here, as well as the tripartite approach to balancing workers' and employers' interests. I promised you near the beginning of my remarks to share what I thought about the work group's vision of productive longevity for Singapore. And the question I posed was, is productive longevity an economic, a social, or a political vision? It is quite clearly an economic vision. Using this lens, we see the growing pool of older workers as a resource which businesses can tap. This can potentially bring some relief to a tight labor market, help employers meet their manpower needs in a Singapore that is fundamentally labor constrained. For the individual, work produces income and improves retirement adequacy. So whether from the business standpoint or from the individual standpoint, you could argue productive longevity as an economic vision. But productive longevity, I think, it's fair to say, is also a social vision. Work is often an integral part of a person's identity. We introduce ourselves without always being asked, by saying what our occupation is, our profession is. And work provides a natural community to be part of. The world of work is also where individuals of diverse backgrounds, ethnicities, and ages come together for common cause. The engagements, the relationships, and the sense of purpose derived from work contributes to the health of older workers. A longitudinal study by Duke and US Medical School's Center for Aging, Research and Education found that older Singaporeans who continued to work generally fared better in terms of psychological, physical, and functional health than those who had retired. The former vice president of the Singapore National Employers Federation, Ms. Goh Swee Chen, she was incidentally also the former chairman of Shell Singapore, she found a nexus between the economic and social visions of productive longevity. And I'm quoting from her. She says, "From a business perspective, you can only prosper if there is stability in society, if there is cohesion and inclusion in the society, rather than thinking about age as a problem. From a business perspective, it is really a benefit that we could extend a precious resource here in Singapore." So she found the two intersecting. For me personally, productive longevity is equally a political vision. It is a political choice to treat our aging workforce, our aging population, as an opportunity and not as a burden. To enable our people to contribute for as long as they wish. As a result, we allocate resources, scarce resources if I may add, and update policy to support this choice. Since 2011, we have paid out some $3 billion in special employment credit to employers to support their employment of older workers. 2/3 of workfare recipients are above the age of 50 and half above the age of 65. So this is what it means. You exercise a political choice, and you put your money where your mouth is, and you allocate the resources to support that choice. It is also part of our political values to share the effort that is required. We are expecting employers to do their part to develop inclusive workforces and progressive workplaces. For example, physically demanding jobs may need to be redesigned to reduce the strain on older workers. They may also need to cater to some older workers' desire to work at lower intensity at this phase of their lives. I must stress, however, that it is not only employers who must adjust. Our workers must be willing to reskill and move into new roles. They accept that beyond a certain age, the terms and conditions of employment may change to relieve the cost pressures on employers. They must also participate in helping their employers transform to stay competitive. Government, too, must support workers and businesses in these endeavors. Besides the key recommendations we discussed tonight, there is a slew of others that we must work on, from helping businesses reduce the medical cost exposure to improving health and safety measures as a result of an older workforce. We accepted the work group's recommendation that a package of wage offsets that will help to bring relief throughout the next decade of changes to the retirement and re-employment age. And each time the CPF rate is adjusted, transition support will also be provided. Deputy Prime Minister Heng Swee Keat will share about the package of support at the next budget. This will be February of 2020. It's always been in February. Vikram, correct? Yes. Trade and Industry Minister Chan Chun Sing and I are working together with him to shape this package. So we're taking feedback. One last point. Is Professor Jin Young here? Professor Jin Young of the NUS, in today's Straits Times article that she published, has described the work group's proposals, those that we just talked about, as, how did she describe it? Towards the end of her article, she said, these are an inevitable policy trend. Inevitable policy trend. But I would like to say that there is actually nothing inevitable about the consensus that the tripartite partners built. In a few weeks, I will be meeting up with my international counterparts at the G20 Labour and Employment Ministers meeting in Matsuyama, Japan. And I can share with you that the demographic developments in Singapore have many similarities to those of many advanced economies. We are not alone in this. The ministers have therefore been in contact with one another and exchanging notes. Indeed, our policy choices are clear and not terribly different. But building consensus has been extremely difficult for some of my colleagues. Discussions in their countries are fractious and politically charged. Sometimes it is one step forward, two steps back. Not 2 steps forward, 1 step back. It's 1 step forward, 2 steps back. In sharp contrast, the temperature in Singapore has been kept comfortably warm. So I'm quietly hopeful that in a decade or so, we will look back on this remarkable period of transition and thank the work group for launching us on this journey. Thank you once again for inviting me. I look forward to our discussion.